Good day, friends. Thanks for joining again for our monthly commentary on equity markets. The month of April 2023 was a great month for Indian equity. We saw almost a 7% up move in broader equity markets. This was on the back of some elevating of concerns as far as the interest rate increase in India and globally. We have been seeing a very sharp increase in interest rates in India of almost 250 basis points. In the policy in the month of April, RBI decided to go for a pause, and they did not increase the interest rates. While it was widely expected that the interest rates might go by 25 basis points, RBI decided to hold on to the rates and monitor the data which is going to come in the next few months. We believe we are towards the end of the interest rate tightening cycle. We may have one more 25 basis points hike at the most at some point of time during the year, and post which we might see an extended pause. So, which means that the interest rate tightening cycle is coming to an end. If you look at the US markets also, the commentary from the Federal Reserve seems to indicate that they are also coming almost to the fag end of the interest rate tightening cycle. The markets are hopeful that somewhere towards the end of the year or early next year, the US Federal Reserve will start cutting interest rates, which will be positive for the economic growth as well as for the equity markets. As far as India is concerned, we also saw the last quarter's results coming in, while there were some disappointments on IT sector results, but largely the results have been in line with expectations. Our sense is, somewhere between 810, 815 rupees of EPS for FY23. The next year expectation is that we should see somewhere between 12 to 14% kind of earnings growth for Nifty companies. So we should see somewhere around 910 to 920 rupees of EPS for Nifty companies. On that basis, market is trading at an average valuation of around 19 to 20 times. If you look at the long-term averages, market has traded at 17 to 18 times on a 10-year average basis. So we are trading, let's say, 5 to 8% more expensive valuation as compared to the 10-year average. So in our view, it is important that we are careful about what stocks we pick. We believe that when the Nifty will have 5 to 10% upside in the financial year FY24, there is a lot of interesting opportunities which are emerged in the small and the mid cap space. If we look at the markets from October 21, that was the first time market touched 18,000 on Nifty, and today, after 19 months have passed and we are still at 18,000 level on Nifty. While Nifty has been flattish, there is a lot of price damage which has happened in the small and the mid cap space. Several stocks have seen increase in earnings growth, yet we have seen moderation in stock prices. So we believe CY23 is a great year for bottom-up stock picking. There is a lot of interesting ideas on the small and the mid cap side as far as chemical space is concerned. Certain mid cap IT companies are poised to show extremely good growth, even if CY23 might be a little difficult year in terms of revenue and top and bottom line growth. But we believe the long-term revenue and the PAT growth potential for some of these mid-cap IT names continue to be extremely exciting. There's a lot of action happening in India as far as capital goods and infrastructure activity is concerned. Those companies have delivered extremely strong results. So we continue to be positive on them, and we expect that even FY24 should see extremely strong earnings traction as some of these capital goods companies are concerned. Banks, another good pocket for the market. We have seen strong earnings coming in from most of the tier 1 banks, and we believe this trend should continue for the next financial year too. So we expect, while the credit growth might moderate from a 15-16% kind of level to, let's say, 13-14% level in FY24, it is still a very, very healthy number. We believe most tier 1 banks should be able to deliver 15 to 20% loan growth, and which should mean that they should see extremely strong growth in NIS. And with the provisioning being low, we expect banks' profits to remain extremely healthy for FY24. Pharma is another space where we are seeing early signs of things getting stabilized as far as the US generic opportunity is concerned. There's been a significant price damage in the last 5 years because of increased competition and more regulatory oversight. We believe going forward, some of the pharma names, both Indian domestic formulation oriented players as well as the people who have been more focused on the US generic opportunity, both should start seeing better earnings traction. And we should see healthcare as an opportunity also start to do well after 2 years of underperformance. So broadly, we remain quite constructive on Indian equity markets. I think after 18 months of sideways correction and consolidation, markets looks set for good earnings growth. And we believe CY23 is a great year for long-term portfolio creation. If we invest money in a staggered manner in CY23, hopefully we can create a good long-term equity portfolio from the 4 to 5 year perspective, where healthy returns can be, where the investor can avail of healthy returns. So with this, I will end this month's session. Thank you all for joining.